CNBC-TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. SaaS unicorn Amagi acquires Streamwise, a US-based data platform for content distributors, for an undisclosed amount to strengthen its streaming data analytics solutions. This is Amagi's first acquisition, and it comes after the firm announced a $100 million plus investment from General Atlantic. Beer company Bira 91 raises $70 million in Series D funding round led by Japanese beer company Kirin Holdings. The funds will be deployed to expand production capacity by commissioning new breweries and expanding its existing facilities. Electric mobility startup Ultraviolet Automotive raises an undisclosed amount of investment in Series D funding round from Qualcomm Ventures and Lingotto. Capital to be deployed for expansion of presence across India and subsequent expansion in international markets. The group of ministers on levying GST on online gaming, casinos and racecourses fails to arrive at a consensus on valuations. Sources say members from UP and West Bengal prefer different rates for games of skill and games of chance. The other members are open to taxing all three events at 28%. Nykaa's chief financial officer Arvind Agarwal resigns from his post. Agarwal will leave the company and step down from his role on November 25th. Nykaa informed the stock exchanges, adding that he would pursue other opportunities in the digital economy and startup space. Elon Musk halts relaunch of Twitter Blue Check subscription service, says holding off relaunch of Blue Verified until there is high confidence of stopping impersonation. Musk also said that Twitter added 1.6 million users this past week. Britain's competition watchdog launches an in-depth investigation into the market dominance of Apple and Google's mobile browsers. The Competition and Markets Authority said that responses to its consultation from June revealed substantial support for a fuller investigation into the matter and how iPhone maker Apple restricts cloud gaming through its App Store. Those are the headlines we're tracking for you this evening. Premium beer company Bira 91 has raised $70 million in its Series D funding. The round was led by Japanese beer company Kirin Holdings. The investment from Kirin Holdings comes at a time when the demand for beer is witnessing a massive surge and the company continues to strengthen its national and global presence. To talk to us about the road ahead at Bira 91, joining me now is its founder and CEO, Ankur Jain. Ankur, welcome to Startup Street. You're backed by Japanese beer company Kirin Holdings. They've tripled their investment with this round. What does their backing mean to you? First, tell us that.
Thank you, Shruti, for hosting me. Kirin's, of course, tripled their investment with this latest round in our company. And we believe that this is a great affirmation of the work that we have been doing at Bira 91. But more importantly, it's a reinstatement of faith in India and the Indian beer market. And one of the reasons why we've raised this capital is to really enhance our manufacturing footprint within India by both expanding capacity in our existing breweries and by commissioning some new breweries.
Okay. Ankur, with the Series D fundraise of $70 million, what is the current valuation of the company?
So, Shruti, because of confidentiality reasons, I may not be able to disclose valuation, but it's sufficient to say that it's a significant bump up over our last round. And more importantly, I think this is a very meaningful round raised by a food and beverage brand in India, probably one of the largest fundraisers by a food and beverage brand in India.
Okay, a significant bump up from the previous round. You've not disclosed the figure. But Ankur, let's now talk about your fund allocation plans. You plan to use the funds to expand production capacity by commissioning new breweries and expanding your existing facilities as well. First, tell me, what is the current manufacturing capacity, and then how many new breweries are you looking to set up, and how do you plan to expand the existing ones?
So we today have 5 manufacturing facilities with combined manufacturing footprint of about 2.5 million hectoliters. We expect to double this over the next 24 months. We will be commissioning at least one new brewery over the next 12 to 15 months as we expand our manufacturing capacity. Today, we're the 4th largest beer maker in the country, and we hope to be very close to becoming the top 3 in the country in the next 2 to 3 years.
Okay, so one new brewery over the next 12 to 15 months. Ankur, you have a presence across 550 towns in 18 countries across the globe. With the fresh funds raised, you also plan to increase the company's distribution footprint across the country and, of course, globally. But what new markets are you eyeing? If you could take me through your expansion plans.
So, Shruti, India remains a key focus for us. Today, we're available in only 1 out of 3 licensed outlets in the country. So the first goalpost for us is to ensure that we are available in across 100% of outlets in the country. But with this partnership with Kirin, we do believe that the potential for expanding beyond our own borders expands considerably, especially with the manufacturing and distribution strength that Kirin has across the globe. While we don't have any definite plans right now, I think those will become more discussed. Will be discussed more specifically as we move forward over the next couple of years. Yeah.
Okay, Ankur, you recently announced the acquisition of one of the largest beer pub chain in the country, the Beer Cafe. How has that worked out for you? What is the kind of impact you hope to create with that one?
So, Shruti, our company has always been a leader in innovation, and one of the rationales for us to acquire the Beer Cafe was to ensure that we are able to strengthen our innovation pipeline and ensure that we are able to bring new innovations to consumers a lot more aggressively than we have been in the past. The second rationale for us has been today we're only 5% market share in the Indian beer market, which means that 95% of beer consumers are actually not consuming Bira 91. And I think with the Beer Cafe, we get to understand how we can bring those 95% of consumers into the fold, into the Bira 91 umbrella. So it's still early days for the acquisition, but we definitely plan to expand our pub and taproom network over the next 12 to 18 months.
Okay, so Ankur, is inorganic growth the way forward for you then? Are you also in talks with other companies?
From an acquisition standpoint, no. We will remain very, very focused on our existing brands and will continue to grow organically, at least over the foreseeable future.
No acquisition in the near future. But Ankur, if you could take me through the current business growth numbers, what is the road to profitability looking like? Also, what are the revenue growth targets you've set for yourself?
So over the last 7 years, we've doubled our business every year. This year, we're going to do the same. So we're on track to double our business or this year as well. From a profitability standpoint, we've managed to improve our margins extremely significantly. And our forecast is that we will be EBITDA break even by next fiscal.
Okay, let me now talk to you about something that has been in the news lately, and there's been, global conversations around climate change. Bira 91 recently announced its goal to become the country's first carbon-neutral beer company. You formed the B9 Kirin Center for Sustainable Growth, based where technical and strategy experts from Kirin are helping the Indian company with its net zero goal. Elaborate on this, and what is the big play here, Ankur?
So as a beer maker, our energy footprint, our carbon footprint can be significant. And therefore, when we were thinking about what we can do beyond making great tasting beers, we thought that this was the most important challenge for us to attack. And therefore, this Earth Day on April 22nd, we announced our intent to become the country's first carbon neutral beer maker by 2025. Which is anywhere between 5 to 10 years ahead of our peers in the industry and their European milestone, for example. And we've been able to make very significant progress in this regard. To give you an example, in one of our breweries, through collective action and suggestions from Kirin, as well as the hard work that our manufacturing team has put in, we've reduced our carbon emissions by nearly 96% over the last 12 months. And that effort will continue, and we're very confident of reducing our carbon emissions to near zero by 2025 and become net zero by 2025.
Okay. Ankur, talk to me about new offerings, any new flavors in the pipeline?
So this year has been a very exciting year. This summer we launched 4 new products. All of them were super hit products. We had beers with mango, coconut, kokum, Indian flavors for the first time appear in beer. Very recently we've launched our festive range with beer themed around Diwali, hoppy wheat beer, and also we did a recent collaboration with the House of Dragons where we launched an Oktoberfest beer. Next summer is going to be no different. In fact, if anything, we'll be more aggressive with our innovation pipeline. So there's a bunch of collaborations planned. There's a bunch of very exciting flavors that are planned for the March-April timeframe in time for the summer.
Okay, Ankur, before I let you go, one final question. Would you be looking to raise more funds anytime soon to fuel your aggressive growth plans? And also, what is your take on funding winter? What is the outlook for 2023?
This is the golden decade for India, and I think the Indian consumer market is already exploding, and that trajectory is going to continue. So I do believe that the right businesses will get funded. I think if anything, this round of funding is a great affirmation in the India story, the India growth story, as well as the potential for startups to disrupt some business sectors which are extremely traditional. So I believe that the funding winter is temporary in nature, and I think over the next few quarters we'll start seeing a lot more positive news coming out of the startup ecosystem. That said, I think I've been extremely proud of our team because we've been able to navigate COVID and the immediate aftermath of COVID with a lot more stability than maybe some other companies. We're adequately capitalized. I think given the size of the round, we feel very confident that this will take us through our EBITDA break-even milestone.
All right, Ankur, we wish you the very best with all your expansion plans. And once again, congratulations on the fundraise and many thanks for joining us on Startup Street.
So much, Shruti. Have a great day.
All right, with that, it's time for us to take a short break, but a special conversation on the other side with Rohit Kapoor. He's the CEO of Swiggys food marketplace. A lot more is coming up. Stay tuned. Welcome back to Startup Street. On to a CNBC-TV18 exclusive. The meeting of the group of ministers on levying GST on online gaming, casinos and racecourses has ended in a lack of consensus on the valuation. Sources tell CNBC-TV18 that members from Uttar Pradesh and West Bengal want the panel to differentiate between game of chance and game of skill for valuation. Timsy joins us with more. Timsy, what are you picking up?
Well, that's right. What sources are telling us that the group of ministers meeting nominated by the GST Council to discuss what should be the final parameters for online gaming, casinos and race courses has concluded. However, the meeting could not conclude with a consensus. This is what sources say. And when it comes to what were the bone of contention, well, group of ministers, members from UP and West Bengal wanted GOM to differentiate between game of chance and game of skill when it comes to valuation at which the GST should be levied and what rates should be levied. Apart from that, members from Goa, Tamil Nadu, Meghalaya, Maharashtra and Gujarat were on the same page, and they all agreed to the fact that all three business activities, that is online gaming, casinos and racecourses, should be treated at par with 28% GST to be levied at gross gaming revenue. When it comes to now what? Well, the report is likely to be submitted as is, with noting the comments from the two other member states, that is West Bengal and UP, as to what were their views and what is it that what they wanted. And this report is likely to be submitted tomorrow itself to Union Finance Minister for her consideration to be placed before the GST Council. So let's see what finally happens at the GST Council. Will game of chance and game of skill be segregated? What will be the valuation? Should it be the gross gaming revenue, or it should be the final outcome that one gets after winning or losing at these games? That is something that the now GST Council will have to deliberate upon. Let's see what's the final outcome. Back to you.
All right, Timsy, thank you for those details. Appreciate you joining us. Moving on, from facing an indefinite strike from delivery partners in Kochi over wage to war to over 900 restaurants logging out of Swiggy's dine-out platform, a lot has been on Swiggy's plate over the last 1 month. Rohit Kapoor, the CEO of Swiggy's food marketplace, talks about all that with my colleague Aishwarya Anand on the sidelines of the Indian Restaurant Congress 2022. She began by asking him about the company's outlook on the food service market, hitting nearly $80 million in size by 2028. Listen in.
If you look at consumer preferences, if you imagine 7-8 years back, the online component of it was not there at all, right? Today, it's very much a part of the equation, the way consumers think about consuming food. The other vector of opportunity is clearly beyond the top 30 cities, where food habits are changing. I was in small towns over the last 2 months, and you'll be surprised that in a very small town, people actually want to actually experience sushi, right? Which I wouldn't have expected there. But then, every time you travel, you think India is changing so fast, and it just surprises you. So I do think that a lot of the growth is also going to happen in the tier 2, tier 3, tier 4 towns.
On that note, I do have to ask you this. So, Process has said that their shares in Swiggy has actually grown to $212 million for FY 2022. So, I just want to understand from you that what is the growth looking for the food marketplace?
Growth is always there, because if you look at it depends on what you're talking about. If you're talking about month on month, there'll be a few months which are festive months, next month is not. So you'll see those patterns play out all the time. If you look at pre-COVID to now, there's obviously been very strong growth in the category because a lot of habits changed during that. If you ask me a 10-year view, I'm totally bullish on the sector, right? Okay. If you ask me a 3-month view, it may be slightly different. But if you just step back and think about where we are as a country, right? Just how many restaurants are there? There's so much upside. You'll be surprised that some cities in other markets will have more restaurants in a single city than some states in India, for example, right? You see that headroom. You see the headroom in terms of just consumption habits going up, per capita income growing. India will grow from wherever it is today to a $2-3 trillion economy. I think so. Growth in the medium to long term, for me personally, is not a concern. I'm a big bull on Indian growth. Okay. Within that, obviously, the vectors of growth will keep changing. Correct. And I think the bar on what you need to do for the consumer is shifting very rapidly. The Indian consumer is a very I don't think the Indian consumer is actually behind the curve. They're very evolved. So you have to keep up all the time, and growth will come. So I'm actually very optimistic about the way the category is going to build up over time.
So while you're talking about that, the same report had mentioned that the losses are also gone to the 100 million side, and that is because of the expansion into the quick commerce space. So could you just give me a sense of that? Do you think Instamart will be the driving force for Swiggy in terms of growth in the growing future, or do you think there's going to be a balance with both the food delivery business and the Instamart?
I genuinely think that these are very strong categories, both of them.
Correct.
And I think we are we're doubling down on both. I think
you're anyway transitioning into a super app with a lot of Swiggy Genie, with a lot of stuff that's happening on Swiggy.
I think we are a company which wants to deliver convenience to our customers in multiple different ways, and I think the job is on us to make sure the category growth continues in both the large categories we are in, which is food and quick commerce.
From an overall perspective, I just wanted to understand also one thing. There's been a lot of conversations happening around, for a cut in the to lower the prices for the delivery partners' fees. I just want to understand from you, across markets, have you taken a hit like that?
If you look at 3 things which are happening, one is the number of people who are coming into the fold and getting employed. Right? I think. Companies such as us have had a role to play in that, and I think we take a lot of pride in just making sure that our delivery partners, our superheroes as we call them, can get these employment opportunities. And you just imagine you're coming from a small town into a big city, and you can actually get started with earning money within few hours. There are very few opportunities like that, or that can be created in this market. I think we we all as an ecosystem need to make sure that it is sustainable on all sides, right? The second thing is about there is no plan to reduce somebody's earnings. That's the last thing we wake up thinking about it. And third is, look, I think it is a new while the category has become large over a period of time, this is genuinely one of the biggest focus areas for us in terms of making sure that we are absolutely doing the right thing by our delivery partner.
Now, you were roped in this year to drive the growth for the food marketplace. I want to understand, Rohit, from you that what is your short-term, mid-term and the long-term plan for Swiggy, and what are the interesting stuff that you have in the pipeline?
So I have the short-term, medium term and the long-term plan is the same, right? Which is to serve our consumers incredibly well.
Correct.
Right? And be relevant to their lives. We offer more and more convenience to them, right? I truly believe that if you're obsessed about that, if you're obsessed about making sure that your restaurant partners you're listening to, you find a lot of value together, right? And your delivery partners are happy with you. I think that's the core job. While doing that, there's an obligation to make sure that the businesses run sustainably, which all of us are, working every day, every hour towards that outcome.
One final question. So your recent acquisition was Dine Out. So I want to understand, how is the acquisition doing? How is the dine-in space doing for you? There were reports that had said that close to 900 restaurants have dropped out of the Dine Out platform. Could you give us a sense of what's happening there, like on a broader view?
If you look at the Dine Out business, the hundreds of partners are joining every month, right? So I won't read it too much into anything else. At the same point in time, I think we are absolutely committed to discussing all kinds of possible options with everyone who's relevant, right? Because we, as a value system of the company, we believe in a win-win. बात से बात हम करते रहेंगे तो Dine Out as a product भी अच्छा होगा. हमारे consumers के लिए और relevant बनेगा. It will become more and more relevant for our consumers.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.